Hello and welcome to the Commodity Trade. I'm Piyush Jain, and if we take a look at the way metal prices have been behaving, it's almost a weak trade in the LME markets. Again, the base metals, the crude prices, those actually all decline, and in the Asian trade it's nothing different. Again, there has been a weak trend across zinc, aluminium, copper, all basically are showing some sort of weakness here. But now some sort of recovery basically is being seen. Almost flat is where again the copper futures are trading in the Indian markets. In terms of aluminium, zinc again basically is trading with marginal losses, 0.3% down, and aluminum almost was flat. Lead again basically is very flat. So again combine those, and nickel also again 0.3% down here, and yesterday also was trading sort of with deep cuts with that context. And if you see what basically is happening in the markets, actually is nothing different here. Crude prices, actually those have cooled off and should be very interesting here, because there has been some sort of uncertainty whether Russia is going to agree to extension of OPEC cuts. Broad consensus is that all Saudi Arabia, OPEC members, Russia, they all should be agreeing, because higher crude prices is in their favor. The question here is oil inventories, again those basically have increased in the US markets, and again that basically is causing some sort of cooling off on the crude prices. The Keystone pipeline, again that basically the restart was also a slight small marginal dampener on the prices here. Very interestingly, a lot of hedge funds, again they have cut their net long positions not only on crude price but also on crude base metals including copper, zinc, aluminium. Actually, we have seen some sort of cut in the net long positions, and again that should be interesting. We are going to ask our analyst more on that here. Also, again, if you're taking a look here in terms of lead, tin, those metals also basically are cooling off in the trade. In terms of the MCX, again basically there is some sort of marginal uptick here, 0.1% up right now. Broadly in the Asian trade, again those are trading slightly soft here. Aluminum again basically almost trading with marginal weakness here. So let's try and understand basically what's the trade here. And if actually is indeed a good sort of day movement in terms of a short trade, if that sort of opportunity is also available, we'll try and explore with our guest today, Prathamesh Malia, Chief Analyst, Non-Agri Commodities and Currencies at Angel Broking. He joins us live. Prathamesh, welcome to the show. First question to you would be that what's the situation right now in terms of the base metals? Because we have seen that on one side, the hedge funds, they actually have reduced to an extent 2 to 3% the net long positions, but also over the last few sessions we have seen some sort of weakness in the base metals here.
Yes, Piyush, I think base metal is taking a hit because almost most of the year it has been on the positive side. I think it's time for correction across all the base metals. But you're looking at specific fundamental factors. I think specifically talking about copper, inventories are continuously declining for the past week or so, more than 10% decline on the LME, and that is one factor that would be supportive for copper. But in the near term, since the entire base metal pack is trading lower, I think even copper is in a make or break situation. 440 it is what it's currently trading at. I think the weakness would persist and continue down towards 425. While as far as nickel goes, I think this counter does not stop to fall. At 700 and below 700, 680 is what we are looking at. I think the uncertainty with regards to Philippines continuing the ban still remains, and that is what will drive nickel. But if you're talking about lead and zinc, I think I would avoid both these metals because it is very volatile. But then it would be on the weaker side. Zinc 205 is what's currently trading in the markets. Possibly it is headed lower towards 196.
Right, Prathamesh, on one side if I'm looking at is that the copper basically had actually rebounded from the earlier losses in the session yesterday in the LME trade here, and again basically we have seen the Shanghai also the copper basically was trading weak here. Now there are different opinions here. On one side actually you're talking about where the copper smelters, they actually are worried in China because there have been crackdowns in terms of the environmental norms here, in terms of capacity shutdowns. But also actually what we are hearing is that there have been some sort of trade actions against China from US here. Overall, if I want to ask you your opinion in terms of trade strategy on copper, what would be the bias here?
I think the bias in the near term would purely be on the lower side. I wouldn't be buyer when the markets are falling, and it purely goes for copper despite the environmental concerns being there in China. They're clamping down on all illegal capacities, and whatever steps it is there in the right direction. But I think what in the near term or possibly in a possible longer time frame it would do it would reduce demand for all the metals because of the reactions by the Chinese government. But all said and done, I think it would be day for copper or possibly move lower towards 425, but I would possibly avoid lead and zinc. This counter seems to be very volatile, and nickel I would be on the short side.
For copper, what should be the stop loss here? Because I understand you have a sell call on M6 copper.
Yes, I think 440 is the entry point. 445, 444 would be the stop. Target lower towards even 430 followed by 425.
So it's a sell on copper again basically, and what's the bias here on crude, Prathamesh, because crude prices they had declined. So is it an opportunity to buy crude, and if yes, what could be the immediate targets here?
I think crude is at a risky zone just before OPEC meet, which is scheduled tomorrow. I think it is in the best and the common interest wherein OPEC nations actually extend their deadline of March 2018. But all said and done, the event look uncertain. Although markets price in that OPEC would do something in order to raise the price, but then I think a little bit of correction, and that would be entry point for buy side on crude. 3,710 is the entry point. 3,660 is the stop. Target higher towards 3,800.
Right, so basically what you're suggesting is buy M6 crude at 3710, again basically the stop loss of 3660, the target is around 3790. Let's bring that call here. Right now the crude is trading around 3720, so a slight dip of 10 more points here, and then basically that becomes a good entry point is what Prathamesh is suggesting, and that basically the target actually looks quite attractive in the context of 90 points from the entry point here. Prathamesh, that was crude oil. Seems like a good buy on dip strategy. What about the precious metals here? Because we have seen the precious metals, those actually have been inching higher over the last two sessions. Some sort of nervousness around the US dollar, but then yesterday what we saw, the dollar actually started rebounding back. And we saw that impact on both the currencies also and around the precious metals also, but there was no major cooling off in the precious metals. Do you believe that that could be coming now?
I think taking into consideration the tax proposal being passed in Senate, I think dollar would possibly head stronger from here on, and that would lead to correction in the precious metal pack. But besides all this event, I think a rate hike in December meeting is what we are factoring in, and that would possibly create a lower jerk reaction in both the precious metals. So I think I would be on the sell side on both gold as well as silver. 29,460, 29,500 is the entry point to sell. 29,600 is the stop. Target lower towards 29,200 followed by 29,000. While as far as silver gold, even I would be on the sell side. Possibly the target lower towards would be towards 38,500.
Right. And also I just want to ask you, like while we had all those four strategies on our screen here, my question would be to you that what we are seeing on the screen is that the Asian LNG prices basically at present are at 3-year high. The LNG prices are almost at $10 per barrel, and usually also that's in proximity to where actually the crude prices they behave. In your own assumption or in your own understanding, is there an indication that the crude prices actually are moving up, or perhaps there could be some sort of shift in demand for the crude oil? Again, that could also be basically positive for the crude price.
I think it has more to do with all ifs and buts with regards to OPEC. Whatever demand it would be possibly, I mean, winter started in US, and this would possibly create an incremental shift in crude as well as natural gas. So I think between both the counters, I think natural gas would be more volatile than crude. Opportunity, while natural gas it is very volatile. 200 and 205 are possible near-term targets as far as natural gas is concerned.
Thanks a lot, Pratmesh, for all the strategies here. Actually, you have all the strategies here. What Pratmesh is saying, he's bullish on crude, basically with a slight dip here, and also basically he's bearish for the intraday strategy in terms of precious metals and also copper, basically where he gave a sell call here. So those are the 4 strategies that Pratmesh was recommending here.